Good morning, everyone. Dan Bossy here with Ben Buckner to again discuss the grain markets here today. Everything's kind of a little lower. We went through first notice day. We liquidated much of the May length. If you look at the sharp drop in corn open interest, it's been dramatic. We're seeing people getting out of the market. We're here to talk a little bit today about what we expect going forward into the end of the week and really highlighting where we're at. So the markets are still looking at bearish economic news. China's PMI was down to 49. That shows us contraction due to tariffs in the Chinese economy. And then if we come back to the United States, again, some slowing here. So in the background of grain prices is this slowing demand profile, both globally and domestically. And I think that's why the market reacts a little bit more aggressively to bearish news, supply news, than something else. So Ben, what do you think in terms of what we do today?
Yeah. It's still kind of, is there fuel for recoveries or is there not? And I think the answer this morning, at least, is there is not. Of course, like the last couple of weeks, we're going to get export sales tomorrow, and I suspect those will be, if not big, probably bigger than the same week a year ago. We're still finding, I think, some short-term export sales, and also wheat is very competitive, and so we've been waiting for the price that does trigger end users and importers to come to the U.S. market instead of other markets. And we may just be starting to see that now. It's, the U.S. wheat market is uniquely positioned compared to the last really decade or so. It is trying to find export demand.
Oh, I think that's right, Ben. And I wouldn't, when you look at July corn, if we really do have 1.4 billion bushels of end stocks, we should grab it around 460. If you really believe soybeans will be competitive and we're still selling some beans, we should grab it around 1025 July. So those are two levels that I'm looking at. But why don't you run us through in terms of the fundamentals where you see us this morning?
Yeah, I'll take just a quick peek at sort of the non-macro issues I think the markets are facing. And for one, there's in soybeans, I think the reason soybeans have kind of led the way down the last couple of days is there's this collision between, what's probably going to be early planting for the U.S. crop. And also maybe the return of some demand issues, especially during the summer months. So one thing that we've been watching is, again, a lot of Chinese economic issues kind of predate the battle of tariffs. So that's going to linger, I think, in the oilseed markets. And so I suspect the story being told now is that China is no longer buying everything that exists in Brazil and Argentina in terms of soybean supplies. And so that market all of a sudden is firm, but it's also seemingly going to find some non-Chinese demand once again. This shows us FOB premiums at Paranaguá in southern Brazil. And again, it's still very firm, but I think that the movement the last couple of weeks has been down, not up. Brazilian beans are cheaper than the U.S., at least for the next 30 or 45 days. So that kind of obstructs new U.S. soybean sales, maybe June onward. And to that point, we're kind of watching for a reason why China would buy just tons and tons of soybeans. And we're not seeing that. You mentioned the PMI. Economic issues, population growth, that's been concerns of ours in China for a long time. And the hog market, it's kind of the beginning and end of their soybean and soybean meal needs. It's done nothing. It's just been stuck at about 14,000 yuan per ton, really since early 2023. So I don't think that market is concerned about hog supply and demand, one, and so probably not overly anxious to boost bean imports or crush or meal supply. So that's, I think, the first market that's got to grab if you are to be excited about oilseed demand globally. And so where are we going? That's kind of what AgResource, that's the context we provide. We can kind of all see the news, but what's next? And I do think, like you mentioned, we're probably going to slide into some equilibriums, not too far below the markets. But again, one of our theses has been just carryover stocks, not terribly abundant. U.S. weather looks very good. Planting dates are going to be within optimal windows, but we still got to grow big crops to, I think, trigger the perception of oversupply. So December corn to us has valued, 435, 440. Just kind of the idea is retracing the entirety of the winter rally. We're going back to the winter lows, maybe not much lower than that. November soybeans, $9.90, $10 is probably where the bearish sentiment stops for now. Then we'll revisit all of this when we get into June, July, Northern Hemisphere weather patterns. And wheat, I think, is the one that's interesting to us. I mean, the supply, the extraction of supply risk, pretty clear, easy to see, makes a lot of sense in corn and beans. But wheat seems to be a little different. It's the market that is adequately supplied today. But to us, when we just kind of put together the average Chicago wheat price over the course of 12 months and where we think the U.S. balance sheet exists, this is what that looks like. So it is fine today, but I do think it's probably the lower end, maybe lowest end of fair value. If we've got US end stocks of 850 million bushels this year, maybe about 800 million next year. To us, the market seems today to be trading something like a 1 billion, 1.1 billion in stocks. So that I think is not going to happen in crop year 25, 26. So I think there's value in wheat. And to that end, it's all exports. We got to find export demand. That's going to be the catalyst, I think, for short covering. But at least the ingredients are there today. This shows us the evolution of world cash wheat prices over the last 12 months or so. And look at where we were a year ago, non-competitive in the markets. Today, on paper at least, U.S. soft red and hard red wheat are the two cheapest origins of milling wheat in the world. So again, the ingredients are there. Too much rain in the plains. We're watching Black Sea weather, U.S. market, U.S. wheat market's price to sell. So stay tuned for that.
Ben, I would agree with you. I think the wheat market, I'm hearing that on the export side of things, phones are ringing in the United States and people are starting to inquire for U.S. wheat, both HRW and SRW, based on our discounts to other origins. And of course, our reliability as a supplier. So wheat to me is the one, if you want to buy something, be long of wheat. Don't be overly bearish of July corn relative to tight stocks. And then we'll let the new crops kind of drift lower as we go to your point of maybe 430, 435 December corn. So good stuff. And thank you for all of that. Any final comments?
I think so. The research for the rest of the week is going to be pretty in-depth, and we're going to kind of transition from exports to U.S. biofuel supply and demand for the next couple of days. So be on the lookout for that. Of course, $1 gets you in for 30 days. But we're going to, again, try to fine-tune where we're going over the next 3 months with our daily research for the rest of this week and probably next week as well.
Well, thank you, Ben. As you look, you always are able to take a trial of the Ag Resource if you're a new subscriber for $1 a month just to see what we do and the research behind it. We put a lot of PhDs and a lot of other things into this research, so it's something I'm sure you'll find enjoyable. Thanks, Ben, and everyone have a great trading day. It's going to be an interesting session in terms of how the wheat market holds relative to other grains. Be well.